The sources and uses table is a summary of the amount of funding required to complete an M&A transaction. The sources and uses section lists the total cost of acquiring the target in a hypothetical transaction structure. The uses side calculates the total amount of capital required to make the acquisition, meaning the purchase price and transaction fees. Whereas the sources side details how exactly the deal is going to be funded, including the required amount of debt and equity financing. Just like how the assets side must be equal to the liabilities and equity side on the balance sheet, the sources side, the total funding, must be equal to the uses side, the amount being spent. The more complex sources and uses of funds table looks like that. Here, the uses of funds would include equity purchase price, and in addition to that, any refinanced net debt, transaction fees such as advisory fees, debt issuance fees, equity issuance fees, and so on and so forth. Operating working capital adjustments and other uses of funds such as pension deficits, operating leases, and other claims on the business of the target. Sources of funds in this case scenario would include equity issued, long-term debt, revolving credit facility as a source of debt as well, and acquirer's cash used, if any. The proposed capital structure is among the most important return drivers in an M&A transaction, and the investor usually has the role of plugging with equity the remaining gap between the sources and uses for the transaction to proceed and close. Let's complete this exercise for sources and uses of funds table. Knowing that the equity financing is 30% of the equity purchase price. Equity purchase price is $2,000, refinanced net debt is $1,200, transaction fees is $40. In this case scenario, my total use of funds will be a sum of all of the above. I'm going to use Alt equals shortcut to sum up all these values. And I can see that my total uses of funds is $3,240. Now I know that my total sources of funds are always equal to my total uses of funds, and that's what I'm going to input here for the cell C14. And then my equity financing is 30% of the equity purchase price. I already have a formula here. Then my debt financing would be a difference of total sources of funds minus equity financing, and I get the number of 2,640. Perfect. Great job, guys.